And good morning. This is Jamie DeLugash with the Earnings Player Live Market Open Webinar. Today is Friday, August 12th, end of the week. Not much to talk about today. We've got one trade working with our Iron Condor Friday. NVIDIA doing exactly what we needed to do. The company had blowout earnings, but a massive rally in the stock in advance of those earnings put the clamps on the enthusiasm for shares today. The stock is up 3 or 4% in pre-market trading. It's been hovering at that level pretty much since the earnings were released. We have a 10% band on our Iron Condor. Should be a nice smooth sailing day for that trade. Expiring worthless across the board, allowing us to keep our credit generated when we placed the trade in the last hour of trading yesterday. That should be right around 50 cents for the Iron Condor. The net credit should be right around 50 cents. Just curious what you all received on your net credit. There was some fluctuation in the stock as well as the option prices at the close. So I'm a little bit curious as to see what you all experienced with your trading. And if you wouldn't mind sharing that this morning, that'd be great. We're about 6 minutes before the market open. Good morning, Patty. Friend giving us a friendly warning. Don't ever put in a market order. I was in a hurry and did that yesterday, and it looks as though the prices were switched. Not sure. Maybe you can give us a little more detail, Patty, on was that with respect to the Iron Condor, or was that with respect to the trades that you were closing yesterday? We had, well, no, was it yesterday or was it 2 days ago? I'm losing track of my days. I believe it was 2 days ago. So are you talking about your regular call and put option trades, or are you talking about the Iron Condor, Patty? If everybody else wouldn't mind giving me a sound check, I hope we don't have the same sound issues that we had on Wednesday when we had everybody switching back and forth to the YouTube recording and the actual webinar, given that there were some microphone issues. All my systems are telling me everything is working fine. Thank you, Charlie, for confirming. We should be good to go today. Looks like a fractionally lower start to the day. The market really did something amazing yesterday. All three indexes, you've probably been hearing about it in the news. All three indexes closed at record highs yesterday. And the last time that happened was in 1999, I believe, about 3 months before the bubble of the .com era burst. Patty says, what sound? I hope you're kidding. Let's see. Not sure why everybody's having trouble with sound. If you are having trouble with your sound, I'll have to circle back. Folks are taking vacations back at the home office and getting back here in mid-August, and I'll try to find out why my sound isn't working as it should with 100% of the audience. Seems to be working for Hugo. Good morning. But it looks like some of you folks are still doing the YouTube gig. So I apologize. I'm really not a tech person. Somebody needs to walk this through me, or walk through this with me, so that I can get it straightened out. I don't like the idea that you're having to go back and forth on two different screens. That seems like a big inconvenience, but I guess if that's what gets us through these sessions, I know YouTube is working. Thank you, Patty. That's, I suppose, the good news. But yeah, so a very interesting day yesterday in the market with the triple historical high close for the major indexes. And like I said, that hadn't happened since 1999. If you compare what happened in 1999 to today, it's remarkably different. I think in 1999 you had every man, woman, and child buying stocks and believing that it was a fail-safe way to build wealth in that era. Today, I think you have more pessimism than what would be indicated by reaching historical highs. Not a lot of believers, and I think that's actually probably a good thing for stocks in general. It's the proverbial wall of worry that we're climbing. And really, the underlying theme is something I've talked about ad nauseum, and that is the Federal Reserve's in the back pocket of the current administration, and absolutely in no way, shape, or form wanting a Donald Trump. Aside from all the other reasons why you might not want a Donald Trump for president, if you're a Federal Reserve banker, your days of autonomy are over the minute he steps into the White House. So you're having a lot of support to stocks. Earnings are pretty good. So valuation wise, you could argue that things are getting a little bit rich. I think NVIDIA actually is a good example of that, where you had really a blowout quarter for the company, and the stock isn't moving as high as what the implied volatility was in the options market prior to earnings being released. And the main reason for that is that valuations are just simply stretched. You're just running out of gas. You also see it, I mean, I could dig a little bit further into the weeds if I can for a moment. Yesterday was an interesting day in the market from a perspective of valuation. If you're a fundamental analyst like I am, I follow a fair amount of stocks that are what would be defined as value stocks, really specifically PEG stocks. We call it the PE gap over in the Millionaire Blueprint. PEG stocks have been on a tremendous run in general since Brexit. And but yesterday you noticed that most of the gains were coming from not the undervalued PEG stocks, but the overvalued PEG stocks, which is a shift in money flow, where the buyers were getting more comfortable paying premium valuations, going to more of the momentum stocks, and leaving behind some of the, what I think are the more attractive names in the market. Whenever that tends to happen, whenever you start seeing that happen, usually it can be anywhere from a couple days to a couple months of seeing a sharp correction in the market. So I think that's an interesting observation, just to help us down the road as this earnings season winds down here in a couple weeks, and we start already preparing for, believe it or not, third quarter earnings, which will start in earnest in the middle of October. Let's see. You folks it looks like helping each other out on the YouTube. I appreciate that. And there are no instructions for going to YouTube. I guess you do have that Rick is sharing in the email link to the webinars when you register. It might give you that option. So, Frank is saying, too bad Macy's and Baba were on the hot list. For those of you that are trading the hot list, I know from the emails that I've gotten, many of you are doing that. Congratulations, Macy's and Baba were nice triple-digit winners for the hot list. And as for our 3 trades on Wednesday, all 3 actually did very well for us, considering where they were when we started the webinar. You should have made money actually on both Disney and Yelp. Well, you certainly made money on Yelp. We pretty much nailed, and I apologize in my frustration on Wednesday. I really just want to reiterate that the market open webinars here are for purposes of analyzing trades and formulating exit opinions. That's where I want to spend my time. That's where people that you all pay a subscriber fee really for that service. And when I'm distracted from that, it really doesn't help anybody. And so I'd appreciate, again, if there are concerns or comments that you want to make, please do it offline. This isn't the forum to do it. And if it happens again, then unfortunately we'll have to take matters into our own hands on that. But really, I'm a little bit frustrated that I didn't get to spend more time on the exit strategies on Wednesday. Disney, I noted, was a $98.50 target. It actually hit that price. That was the time to close the trade on Disney. And if you did that, you actually made some nice money on Disney. Yelp, we were looking for, I believe it was $37.50 on the upside. It also hit $37.50. And that was a nice time for you to lock in your trades. Didn't get to spend a lot of time on the details of that or why I was expecting that because of the distractions. And so it illustrates, again, why I want the focus to be on the analysis. There are other places to voice your concerns. I'm available for discussion at any time offline. And I did go back, by the way, Frank, and analyze every trade so far this quarter. A $500 allocation into each trade right now is a net positive $1,500, not including the 2 Iron Condor trades that we made where you're pocketing your 50-cent credits. So to answer your question from Wednesday, you are making money, or you should be. If you're not and need some help making sure you're executing the trades properly, I'd be more than happy, again, to discuss that with you offline. All right, with that, we're 5 minutes into the market day, which means we should go ahead and share my screen. Stocks are, as expected by futures, open to the downside, but just fractionally. And we can go over now and take a look at NVIDIA to see how NVIDIA is trading. Let's see here. I've got it all shared, and let's go over to Yahoo Finance. Refresh my screen there. We can see that the Dow's down about 30, 35 points. Again, really nothing to get excited about. Economic data, retail sales, I think were a little bit weaker than expected this morning. That actually fits very well into the narrative of a dovish Federal Reserve that's going to leave investors alone with respect to stocks and not having to worry about crushing the economy with higher interest rates. That's really the main reason why you've seen a rally in July and here in the first week and a half of August, or first 2 weeks of August. And those conditions should continue. Although, like I said, at some point, even with a friendly Federal Reserve and the wind at your back, stocks can only go so high. Valuations do ultimately matter. And when you see macro behavior like we saw yesterday, where you're catching a bit on the momentum side, you're losing some steam on the stocks that deserve to have higher valuations, it tells me that there's a change brewing, and nothing to get really all that concerned about. It's just that I think everybody knows and can expect that stocks do not go up every single day. That actually would not be good for the health of the market. So anyway, it's perfectly natural that we're a little bit down today. As for NVIDIA, NVIDIA is open now up 6%. So it's spiked a little bit higher, pushing ever closer to our 10% band, but still well enough away that I don't think we have to worry much about NVIDIA. In fact, I doubt these levels hold. It looks like you did have the open at 62, just under $62 a share. You got another nice $1 a share pop. Whether or not we get a $2 pop to get us to the 65 band on our calls that we sold, I just don't see that happening. Could get close, could make things interesting, but I don't think that's what's going to happen here. So things going pretty much as expected. I wanted to take a look at one of the stocks that's doing really well today. It's Acacia Communications, ACIA, I believe is the ticker symbol. And the only reason I wanted to bring this one up is you've got, we talk a lot about the lack of volatility in the market taking away some of the whale trading opportunities. And Acacia was a name that I did analyze. It was very close to making the cut for the green sheet this week. It did not, unfortunately. Wish I would have put it in there. But you can see that the stock's up $18, $19 a share, almost 30%. It was really one of the few in this market where we're at historical highs, where a really good earnings report, not just a good earnings report, but it was a blowout type quarter that has investors buying this stock pretty hard today. Call options on this one, you would have been looking at a 300 to 400% gainer here. So there are whale trades to be had yet, even in a market that's moving sideways. I'm going to work overtime this weekend in my analysis. I think we're in a good spot from a money-making perspective. It's not as exciting as hitting the whale trades like Acacia. I'm always a little bit torn. When you're whale hunting, it can be feast or famine, right? And I love reeling in the big winners, but when you get those big winners, you need to be able to endure the losing trades that come with it, and then of course the snarky comments that come from the peanut gallery. So I always have mixed feelings. I mean, monetarily, speaking, I know that whether we're reeling in the big whales or simply just cashing in tickets, albeit of the crappie variety, the smaller fish, panfish variety. Either way, you're going to end up over the course of the 6, 7, 8 weeks of trading, the 30 to 35 trades that we make here. Ultimately, you're going to end up in the black. What's better? What's more fun? What's more exciting? Well, reeling in the whales is pretty exciting, but just continually reeling in winners too is exciting as well. So ideally, the real sweet spot is doing both. And there have been times when you can reel in the small fish and also the big fish without without getting hurt too bad, going through the dry spells that come with whale hunting. But just interesting watching Acacia today and seeing what a whale trade looks like, because we haven't really reeled in a big monster trade like Acacia, and hopefully the fact that this did occur this week opens up the door. Usually whales come, they gather together, they swim in the same pools, and they're trades that we can identify for next week. So that's what I'm going to be spending my time on. And quick look back at NVIDIA. That was spiking. Now it's looks like it's building a base right above $63 a share. And I guess with about 12 minutes, 13 minutes of trading gone by, it's still a little bit too early to see exactly where the base is going to be. You could get another pop in NVIDIA, but I think we're well below the 65 strike price that we need to collect 100% of our credit. And even if we get a little bit above 65, I just don't think you're gonna, go too far above it, if at all. But 63 does look like it's holding here with a few ticks gone by. Any stocks you want me to take a look at? Any questions that you want to have answered? I know Frank mentioned Macy's and Alibaba. Did anybody trade those stocks? How did you do on Macy's and Alibaba? Macy's was, I think, up 17 or 18%. Now, I for tracking purposes, I do not follow any of the same exit strategies that we use here in the green sheet for the hot list. That's kind of the value add. It would be just too much work for me to do that on all of the hot list trades. So we are taking the guidelines of closing the trades at the 1 hour mark for the hot list, and that's where we're doing our scorekeeping. And I believe at the time Macy's was right around 150 to 200% higher. But if you held Macy's to the end of the trading day, you should have had an even better result. So Mark said he made money on all three. Very nice, Mark. Congratulations. I bet that felt good reeling those in. And Charlie looks like he as well participated in those. One question I did have in my email box about the hot list was, and I gather some of you might have the same question, which is, well, how do we differentiate between the green sheet and the hot list, and are your best trades on the green sheet, and et cetera? If I had the proverbial crystal ball, I would have obviously included Macy's and Baba on the green sheet instead of, I had room actually for 2 more trades. We only did 3 trades in the green sheet. And like I said, Acacia was also a possible trade. So what I do, just so you know, I'm doing expected value analysis on each and every stock that I analyze, and I'm simply doing this on a mathematical basis and basing decisions on the green sheet versus the hot list simply on which stocks have the higher expected values. Now, for those of you that are familiar with statistics, statistics are not absolutes, and so just because a stock has a high expected value or doesn't have as high of an expected value doesn't mean you can't have an even larger result, which is obviously what took place on with Macy's and Alibaba. And on the flip side, you can have your expected value turn out to be 0 when you have a losing trade. So it's a little bit more art than absolutes when it comes to selecting trades for the green sheet versus the hot list. What I would say is that the hot list is really meant to be kind of an introduction to trading earnings, and it's also for those that are really comfortable, that have been through the program, that understand the roller coaster ride that it can be, and are still really interested in trading or having more trades to make than the recommended 30 to 35 trades that we make in the green sheet. I have no problem with that. If you're somebody that really understands what's going on with earnings, and you enjoy the fact that in some perverse ways, people enjoy having the losing trades, because they know that with those losing trades, eventually the statistics are going to go your way, and you're going to have the monster trades. So, and because of the fact that your winners win more than your losers lose, even though you're taking 100% hit potentially on any given trade, over the long haul, you are making money. In isolation, especially when you're going through a cold streak where you're having a number of losing trades, it's not easy to endure. It's not easy to have faith that the next trade could be your 500% winner. But if you're playing this game, and that's, I'm speaking to a wide audience with the earnings player, and so my focus is follow the green sheet, do each and every trade on the green sheet, and that's going to help you fatten your trading account. But for those of you that want more trades, that are just getting a taste of the earnings player and want to see how this all works, going through the learning process, sometimes it helps to do a lot of trades. Make sure you're doing it within your own means, right? You're determining what capital you can afford to risk on a program like this, and then getting comfortable with that, and then, hey, knock yourself out. Go do the hot list. Go do the green sheet. We talk about stocks outside the hot list and outside the green sheet here in the Market Open webinars all the time, and folks are trading those too. So ultimately, the number one goal is to make money, but also I'm trying to build a community here of people that really enjoy trading earnings, really enjoy doing the analysis, taking advantage of Wall Street. I think it's one of the rare times the little guy can actually take advantage of Wall Street. We're seeing it on NVIDIA today. The implied volatility was a Wall Street manipulation and an inefficiency that we could exploit with our iron condor. The statistical odds and the expected value of that trade was very high in our favor. And so, when you get the hang of this and you're doing it over and over and over again, this is, in addition to making money, this is, meant to be fun, and it's meant to give you insight. It's meant to help you, learn about analyzing, markets in general. I think we talk. We've had some great questions from members over the course of the last several quarters, who are enthusiasts about earnings, but also just want to help use some of the techniques here to help their overall trading, and that's fantastic. That's kind of the whole point. Frank's commenting on JCPenney. Yeah, you saw Kohl's yesterday, or maybe I'm hoping you saw Kohl's. That one did follow suit with Macy's. We have, and I've already started to do the analysis on it. TJX was a company that did not really participate in the rally yesterday, and it is TJX is actually, to me, one of the better performers, and the fact that the stock didn't rally in advance of earnings, I think, opens the door for us to get a nice pop on TJX next week. So Frank, if you're following the department stores and you want to do some analysis, you can take a look at TJX. And yeah, Dillard's was another one that they're not all going to follow suit, and that's the interesting thing about the retail sector. What I thought was really interesting about yesterday was not just the brick and mortar retailers, but the fact that Alibaba did well on the day. You usually in the last few quarters it's been a good versus evil, right? Online versus brick and mortar, and there's winners and there's losers. And yesterday it was kind of showing that maybe there can be some cohabitation in the space. And again, I mean that to me is just overstating the obvious. Of course you're going to have cohabitation, but the market, being an emotional entity, takes these themes, these stories. I talked about it the other day on Disney. This short story theme on Disney and the disaster, that's going to be the unbundling of cable and what's going to happen with ESPN for Disney. I mean, they're so I call them LCD. They're feeding the lowest common denominator, and sometimes the market is all about the lowest common denominator, and investors lap this stuff up. And they blindly follow these themes. Well, blindly following those themes creates the inefficiencies that we can exploit at earnings time. So it is always interesting to me, whenever there's somebody tries to come up with an absolute, like it's going to be Amazon and Alibaba and nobody else, because nobody's going to sell anything ever again. Well, that just doesn't make any sense. And that's how the market was pricing Macy's and Nordstrom and some of these other department store stocks. So anyway, so we're about 6 minutes from the top of the hour. I've rambled enough. Looks like you're all sharing on how you're doing trading the hot list and the green sheet. Charlie's looks like he's had some success, and Frank is I think still trying to figure out why his account isn't doing as well, just following the green sheet. But like I said, Frank, I did go back and look at it, and if you and I did go over, you can go listen to the recordings from last week where I went over my pricing on each and every trade. You should maybe listen to that again and mark down the prices that I had on each trade and compare them to the prices that you had. Perhaps if you do that, you might see a deviation, and you're going to have some deviation, obviously, because you're actually executing the trades, and I'm I'm executing the trades with the data that I see. So there's going to be some deviation, but it really shouldn't be that great. And if there's a big deviation, Frank, and you want to sit down and have a one-on-one to figure out how to best maximize your returns, then I'd be happy to do that with you. Happy to do that with anybody, by the way, not just Frank. So, all right, let's go back and take a look at NVIDIA. Let's see here. I don't trust the prices that I'm seeing here. So, in fact, that spike to 63 did not last as I suspected. And in fact, we're below. Wouldn't that be ironic if we had to worry about the 10% on the downside here? What's happening in the overall market? Well, the Dow's only down about 23 points, so you're not seeing any kind of rollover in stocks. So I don't think we have to worry about a 10% collapse in NVIDIA shares. Perhaps there was a Wall Street downgrade. I don't see anything in the news. Sometimes that can pressure a stock, and but I don't see that happening here. Whatever is happening, it's good for us, good for our iron condor. You're gonna again, just a word of caution on iron condors. You never want to be assigned shares. So if our band is breached at the end of the day, make sure you close these trades. Otherwise, they're just going to expire worthless, and you're going to keep 100% of your credit. But you never want to be in a situation where you're assigned the actual. We're not here to be assigned shares, and you don't want to have that happen. We're here to really trade earnings and get out of Dodge. And so you should be able to get out of Dodge here comfortably with your 50-cent credit. And I do think these iron condors now, we're doing well on these iron condors. It can be a great way to augment your trading account allocated to the earnings program. You're not going to get the whale trades. You're not going to get rich trading iron condors, but there's less of a roller coaster, all or nothing feel to it, and it's a nice way to pad your portfolio. And that 50 cents, by the way, is 50 cents that can go to offset your fossil trade. And yes, I did see your comment, Dean. I didn't really read it too closely, but Dean, I think, commented on fossil. And that was another, again, where I think more discussion on the exit strategy. That was a capital recovery, and fossil hit the flat line about 30 minutes after I signed off on Wednesday, allowing you to cut your losses in half on fossil. So hopefully you all are getting the hang of this and took advantage of that move. You should have been able to recoup anywhere from 25 to 50% of your capital on fossil. All right, that brings us to the top of the hour. I think we're all set. I guess the only other trade that's still open is back to week one with the tile shop. I haven't looked at that in some time. It's not really doing anything, still actually now trading below $17 a share. That one is going to most likely expire worthless. It's still open. Expiration is a week from today, so anything can certainly happen. But if it isn't rallying in this market environment, it's not likely going to rally next week. So that should get us caught up on all of our open trades. Let's see. Let's see. All right, Frank, we can take those comments. Let's see. My account shrunk, so I had to lower my risk. It's up 3% only. Well, good. I'm glad your other accounts are doing better, and hopefully you're getting good information here that can help you in all of your trading. And that's also one of the goals that I have here, and one of the reasons why I like doing these market open webinars. All right, I've got a lot of work to do. I want to find whale trades. I want to find some small fish that we can keep catching in the boat, and hopefully we can have another great week trading earnings and the hot list. We're going to have some good trades there too. This puts an end to week 4. Next week is week 5. We only have 2 more weeks of primary earnings season, and then we're going to have to be much more targeted with our trades. I'm hoping to give trades each and every week during what I call the off season. If we're in a sweet spot here, I want to keep that momentum going, and so we'll hopefully do trades during what is beyond the primary earnings season here. I've attempted to do that in other quarters. It really just depends on what's happening in the overall market. So won't really know until we get there, but you can expect trades next week, week 5, week 6, and then anywhere from 3 to 4 weeks thereafter, we'll continue trading. So we've got plenty of fish to catch, and we'll throw the lines in. I'm going to go do my analysis. You'll have the green sheet on Monday, middle of the day, and to the extent there are any live trades, we'll be here with the live market open webinars. Thank you all for your comments and questions. And if there's something I can help you with offline, don't hesitate to ask. Customer service drops me all of your emails, so I see everything. And you know, if I can help you in any way, I'm here to do that. And like I said, I'm in this for the long haul. I want to build a community. I'm hoping you folks are enjoying this as much as I am. It really is fun. You know, to me, it's fun doing the analysis as well as the trading. So hopefully you're learning about the analysis as well and doing some of that on the stocks that you follow that are outside of the hot list in the green sheet. So, all right, with that, I'm going to sign off. Thanks again. Everybody have a great weekend, and we'll see you next week. This is Jamie DeLugash for the Earnings Player. Take care, everybody.